Krista Raymer, we have a new intro. What do you think so far?
Feels very ominous, which I mean fits based off
the music
we're about to talk about.
We're going to change the music.
Okay.
We're going to do the intro music related to the actual conversation we have. No, we won't. I will change the music next week, but I just wanted to note that we're going to call this segment every week Shop Talk with Krista Raymer from Vetrina, because we do this a lot. We thought we might as well give it its own moniker. You'll see it here most Thursdays at 10 a.m. Eastern, right here on our LinkedIn and YouTube feeds. You can find it in its own, what do we call it, a channel or playlist on our YouTube channel. All the details we will share as this video goes live as well. Krista, nice to see you.
Nice to see you too. Feels very official.
I know now. Yeah, it's like very official.
Okay.
We put a logo on it.
Yes.
To take off on Beyonce. Krista, we are now a deep breath away from 420.
Yeah.
It was an interesting 420. A lot of people have posted about it. I think we had a piece in our thing from Lit Alerts. We had a piece from Dutchy's CEO about overall sales. I'm going to tell you what my gist is from my vibe.
Sure.
Overall sales were up, but also discounting may have been up as well. What are you seeing across data that you see?
Yeah, I mean, so my problem with 420, like I'm going to start with being like, we have a problem with 420, and that you can't only look at the week of 420 and define whether it was successful or not. We've talked about it, but if we take into consideration the pull and push around of demand, what basically happens is we see a reduction in purchasing the week before 420, huge sales on 420, and then a reduction in purchasing right after. And it's because we've basically enticed the customer to come in and purchase products that maybe they would typically purchase split over a couple of different weeks after 420. So 420 success isn't built only on the day of 420. If we compare 420 to 420 last year, overarchingly the day, it wasn't anywhere close to what we have typically seen. If you pull in kind of like the Thursday, Friday, Saturday, and the Sunday of 420 and put them all together, and then compare those dates to other 420s, we might see a lift. But I was like, I think we need to take a look at what it looks like from the week before 420. So where do we start? How do we create a lift? And then where do we see the drop off? And specifically in the week before 420 to the week of 420, there was like some chaotic numbers that happened between gross revenue, the amount of discounting, and then where everybody ended up netting out in terms of margin dollars. And so we can dig into a little bit of what that looks like. But I think with a lot of the conversations that you've had, we've been mostly talking about like the week of 420, but I think we need to expand the conversation to include the 3 weeks.
I think in years gone by when we've had this conversation or talked about 420 overall, and you're going to gut check me here, like April, if you take the whole month of April, it looks a lot like March, it looks a lot like May, just because we have this huge spike in the middle of it at 420. Doesn't mean the month overall is awesome. It could be the same as every other month, just with one spike and some valleys. Yeah,
like at the end, it comes out almost even, but we had some lumpiness in April compared to.
Right. Now, and then before I'm going to let you go on as well, but I also want to put a pin in the fact that there are other reasons to use 420 to get rid of aged inventory, to acquire new customers, to a whole variety of brand partnerships, all those things, which we can put a pin in and talk about in a sec. But what is I guess you're talking the week before 420 look like? And you said there was chaotic numbers.
So let's talk about the week before 420 compared to the week of 420, maybe for this, just to like benchmark kind of where we were, so where we would have seen maybe a little bit of a dip, but then like what type of ramp that did or didn't. I've got a look or a view of Michigan, Missouri, Illinois, Massachusetts.
Okay.
Sample size to say some of these markets are a little more mature. We don't see the same lift in terms of total doors from 2024 to 2025. So it kind of is like trying to understand if this is where we're falling in a more mature market is like one of the reasons why I selected these.
Sure.
Missouri would be like kind of an outlier, but it's been on this consistent upward trajectory. And so I think it's helpful to just think about where they might be versus, for example, Michigan or Illinois in their evolution. Let's start with Michigan because it's the scariest one. We
like the sound
saw
of that.
from the week before 420 to the week of 420, there was about a 6% lift. So sales increased 6%. Units increase 12%.
Okay.
Okay. The average item price decreases 5%. The average gross margin went from 39% to 33%. Yikes. And so the net of that is that we saw a almost 6% increase in sales, but we actually see an 11% decrease in gross margin dollars. So the profitability of these sales is far less than the week leading up to 420, where people would have made more money. Now, to your point, discounting sometimes is about trying to get the product out the door and rationalize and get those dollars back into our pockets where possible. But I think this is a really good view of saying, like, what's our definition of winning? If we're just in it to build top line revenue, maybe we could call that a success. But if we are trying to monitor the profitability of that revenue, yikes. Now, caveat this all to say is there's a lot of like third-party brand relationships happening here where maybe there is like a subsidization of some of those deals. So let's say we even add back half of that, it's still like there's a big delta between what the lift in top line revenue is versus the decrease in margin dollars in Michigan.
Yeah, maybe the music wasn't so ominous after all.
No, I'm telling you, you knew something. You felt it.
Well, let me ask you a question because you're a sophisticated retail strategy person. You see it, and I think you've seen it. You knew that, like, if we said, what do you think is going to happen? I think you probably would have predicted something like this. But a mom and pop or a one-off shop, this is pretty hard to digest. They could say, hey, we did a great, our sales were up 10%, but our margin was down 10%. Like, it's worse than a wash.
Yeah. I mean, it's important anytime we're going into a big holiday, if we think about the amount of energy, say, for example, like all of the resources in Michigan that went into the week of 420, did it do what we wanted it or needed it to do? And I've seen a lot of arguments where it's like, you're going to capture new customers on 420. People are in the market. Yes, but in a more mature like environment like Michigan, are we adding a lot of people to the total addressable market at 420? And is the in-store experience / like the product that they're purchasing the thing that's going to turn them into a reoccurring customer? You need a lot of other strategies going on to be able to make sure that that's the case. And so I hear that argument, and I do think that there is a number of customers that are probably looking or willing to enter the market that at any other time during the year maybe are not. But the vast majority of the purchasing that is happening is your pre-existing customer base, and they are purchasing product at a lower price than what they're willing to pay all year long. Right. And so then people would say, well, what if we lose the customer? I'm like, but did you make any money by selling it in the way that you did to them anyways?
Right.
It's very hard to be able to make a call.
It's hard because cannabis consumers, especially the really great customers, expect something like this on 420.
Yeah.
Hard to untrain that behavior. But if it's hard to untrain that behavior, you need to really think about what you're going to do around 420 to either make it not cost you money, but also what types of resources you're going to put behind it, and what else do you have to capture more customers, get them to spend more in that purchase, and or come back after 420.
Yes. Yeah, you need a before, during, and after plan, and that can help to combat some of that dip after the fact. But it doesn't. The results in market right now are really hard to rationalize against how much energy and effort probably went into making all these things come to life.
Yeah.
Ask any marketing team and they're like, we created so many assets. Right. And you're like, well, at what cost?
Right. And staff, and you're just talking about overall sales of product, markup on product, like it's product inventory specific. It's not necessarily around staff time put in, extra marketing materials, advertising spend, any of that. Like this is just product, like
inventory cost and revenue generated from selling that inventory. That is literally it. In these numbers, we have no consideration of the soft costs to make this happen.
Right. Did you see anything interesting that you think, like any interesting strategies to either avoid that next time, or what folks should put more thought to next time? Is it, let's look at the month overall, because if you put all your emphasis on 420, we know what that looks like. But if you could do less bad the week before and the week after, your month could actually be quite good.
Quite good. Yeah. That I think is expanding our understanding of 420 beyond just 420. Probably like the first win that can happen. Mm-hmm. Second win is to be targeted with what we're trying to do and have an intention. So the week of 420, if we know that people are looking for deals, I saw this a little bit this year, I think, with people trying to push out some maybe aging inventory, but also understanding what our customer is looking for. Potentially you highlight that product the week before 420 and the week after 420. So it's really, what product are we trying to move? What is our definition of success? Like, what are the KPIs and in what order? Because everybody's going to be like, well, there are all of these lists. It's like, we have to prioritize which ones, and then expanding our definition to include much more than just 420 if we really want to come out winning. Having an understanding of like what you are doing in terms of baseline leading up to 420 is also helpful, so that you have some kind of measurement against what the trend line has been. In mature markets where we have pricing compression, for example, it can be really hard to look last year versus this year. 2024, you're like, numbers were so high, but also sometimes in instances like that, inventory was like 20% more expensive, or the average unit price was 20% more than what it is today. And so if you know that, and going into 420, we've got to think about what we're featuring. It might not make sense to feature low price product. We might have to feature more expensive product to be able to just get the contributing dollars, make the lift if we're trying to beat last year, for example. So same store sales is a really hard metric right now in any mature environment that has any level of pricing compression.
Yeah. Any good news, Krista? I'm just kidding. I'm kidding, but at the same time, I mean, these are mature markets. This is, most of these people's not first time through 420. They understand that it is a unique opportunity to think about this one thing. And I mean, on the bright side, like you talked about brand partnerships, it is maybe the best opportunity for brand partnerships to be developed, evolved, and sort of successful.
Yeah, I mean, I think it also begs to say, like, is 420 a community-based holiday? If it is our community looking for discounts? And like, that takes a really hard line on what you might be willing to test in an environment, but also would be like it's hard not to be like, turn them on. Right. So it takes some kind of level of definition of what it is going to take to win, what winning looks like. But I have this larger question: if next year we will see 420 show up from a discounting perspective, or if like this year actually is the break point, that then next year becomes more customer community centric. I think most people would say like, we're being customer centric by being discount heavy, but like being community centric, and are we just trying to bring our customers together and create some level of interaction beyond just purchasing for a discount?
Promotions.
Probably the whole industry is trying to have that conversation right now, but
promotions versus discount. What does that look like? What are we trying to achieve? Yes. Setting goals. Okay.
Yeah. Last year, I think back to like, we probably had this conversation last year, and we were talking about 420 and then the dip after 420. And this year, I felt like anecdotally, I'm hearing and seeing more people pay attention to that. If I could just raise my hand and say, we need to take a picture of the week before, the week of, and the week after. we might see different behavior based off of that if they saw what was a trend line happening.
Understood. Krista,
Jay.
this is not the first time that we've talked on a Thursday, but it's the first time we're going to call it Shop Talk with Krista. Yeah,
Okay.
Shop Talk with Krista. Thank you again for your time, your energy, your insight, and for bringing this data forward and for giving us a picture of what April might look like for a lot of retailers in Illinois, Missouri, Michigan, and Massachusetts. And we'll connect with you next Thursday, Krista.
Thanks, Jay. See you next Thursday.
See you next Thursday. Bye. Thanks, everybody. We'll be back tomorrow with This Week in Cannabis News, powered by Dutchie. Krista, we'll see you next week.